Right, so for banking, the good thing about it is the process is quite transparent and it's very structured. Well, bad news is it's very, very long. So in terms of timeline opportunities, in the first year, all the bulge bracket banks, or the biggest American and European banks will offer spring weeks. So it'll be either a week or two of being a very general intern, kind of just shadowing people and just attending presentations and that sort of stuff. And that usually happens in the Easter holidays. Now, I think most of the recruitment for the summer internship, well, not most of it, a lot of the recruitment for the summer internship is made through the spring week. So it's good if you can get involved in the spring weeks and you can fast track yourself into an interview for the summer. But if you don't get it, then fret not, because I think at least about 60 to 80% of the positions for the summer internships are still available when your second year summer comes around. So in the summer is when most of the banks are really looking to hire people. And it's a bit different from law, where you have to go, you can do a few internships. In banking, the internships are 10 weeks long. You're not really an intern. Your title will be a summer analyst. So what you're doing really is you're actually working for the firm proper for 10 weeks. And most firms will really only hire interns into their graduate program. So in terms of graduate opportunities in banking is a lot smaller. And you have to kind of do an internship first in the bank before you go into as a graduate. But in the very unfortunate scenario that if you don't make a summer internship, there's still a very good chance for you to go in via the graduate program. Although the main issue here is because they haven't had the 10 weeks to get to know you, your interviews will be a lot longer. You can expect it to spread over 1 or 2 days, where you have to meet every single person on the team or even meet people from other teams just to gauge your prospect as a future employee. So, your prospects after graduation. Now, the first thing you do if you get hired is you have to take your FCA license, which is the Financial Control Authority. And from there, you obtain your license. That's when you're qualified as an investment banker, if that such a qualification exists. So, afterwards, depending on the firm, you'll be sent for a really long training program, about a month to 2 months, depending on the firm you're at, and usually either takes place in London or New York. If you're in an American firm, most of the time they bring to New York, and if you're in a European-based firm, you'll be based in London for a training program. Now, after the training program is done, that's when you start off your fresh life as an investment banking analyst. And you can expect to spend about 2 to 3 years as an analyst before you move on to become an associate. And from there, as an associate, you spend either 3 to 4 years, and you move on to becoming a vice president. Now, when you become a vice president, that's when your responsibilities really hike up, because before that, as an analyst and associate, you're not really expected to bring any business to the firm. But as a vice president, where your base salary is a considerable amount to the firm, that's where you're expected to bring in business. And from there, if you perform well, you'll be brought up to become a executive director or a managing director, depending on the firm you're at. And for some firms, you can even rise up to become a partner, but that's only for the small, non-public investment banks that haven't had an IPO yet. Now, just a bit of a caveat on the kind of progression of your career. It's quite different for different branches of investment banking, because as a sales and trading person, as a salesperson or a trader, your job as an analyst and as an associate, as a VP, and as a director is essentially not very different at all. You're just dealing with bigger clients and you're dealing with bigger projects. But as a person, as an analyst and associate working in M&A or equity financing, where you're structuring deals, that's where the difference really diverges. As a junior employee in a M&A deal, you're really there to do the Excel work, you're there to do the technical stuff. And as a director or as a VP, you're really there to bring in the business. You're there to speak to clients, make sure they want to do the deal with your firm. And as a junior employee, you're there to take the deal, from there execute it for these senior managers. But on the sales and trading side, you're dealing with live market deals every single day. Your job is no different as a junior employee from a senior employee. So moving on to the recruitment process, obviously the first thing that really, the first benchmark you're going to look at yourself at is the CV and cover letter. And depending on the firm, you have application questions or you have cover letters, or you may have both. So be prepared on that. And every single bank will make you do at least 1 or 2 tests, and this test at least will involve a numerical test, because the work environment is very heavy on numbers, so they need to know that you're good at handling big numbers in your head. And also, some banks will make you do a numerical logic test, a logic test that really gauges the way you think. Or sometimes you do a situational behavior test, where you're given a scenario and you're given a few choices on what you do to behave in that scenario. Now, the combination of these results would either result in a rejection letter straight away, or an invitation to a phone interview or a first round interview. Now, some banks would like to do a phone interview first, and these phone interviews usually involve someone from the HR department speaking to you. So you won't get to speak with someone who in the business yet. You get to speak to someone from the HR, and you get very generic questions about your behavior and about your opinions on anything to do with economics or finance. If you pass that, you'll be moved on to the first of a few interviews. So for different banks, it works quite differently. Some banks will give you 2 assessment center days, and some banks will give you 1 assessment center. But one thing is for sure, at the assessment centers, you'll be interviewing with actual people working on the desk, people in the business. So you're expected to answer a lot more technical questions, and you're really expected to get along with them, because these are the future guys you'll be working with. Regarding the internship, like I said, is 10 weeks long, and usually every single week there will be a interview with your manager or your line manager to kind of get update on your progress. We don't really have any final interviews per se. You're kind of given feedback as you go along for the entire internship. But sometimes you do get a midterm review where your manager will tell you your progress, and failing, in the midterm interview, if you don't do well for that, usually you are given a choice of moving on to another desk or kind of moving to another area of business if you can.